first of all, I'm just going to say a few words about the research we've done, the survey we've done. That research looks at the drivers for people moving into investing for the first time, often through some of the platforms presented here tonight or represented here tonight. We're looking at what the drivers are, what the attitudes and behaviors are of people once they get in. We've done that because we think we've seen a significant change in our markets. We want to understand a bit better what's causing that, where we can operate, where the platforms should operate. So it's an important topic for us. And it really has been a game changer globally in terms of global markets, making investing accessible to a much greater range of people. And the people that have got themselves involved in this space who probably wouldn't have been involved in the past are feeling very positive about it. Obviously, that may reflect fairly bullish markets, but for sure, it's good to have people engaged in our markets, and it's good to have people feeling positive about that. We're also encouraged, and I will say just maybe a little bit surprised to see that most of those investors coming in actually had a reasonably good sense of how they should be operating, the sorts of things they should be thinking about, taking a long-term view. We're not seeing as much day trading or short-term trading as perhaps we might have expected, with only 2% of the people we surveyed owning up to day trading, at least. I don't know what the real stat is. But nonetheless, whilst we see all of those good intentions, human nature does get in the way. And FOMO, fear of missing out, is a big driver. Don't we all know it? Anyone who's tried to host a drinks event in Auckland will know that David has terrible FOMO and always pitches up when he's not invited. Wow. Sorry, that's not in the research. That's just although a few people did comment actually in the research. So about 1/3 of the investors who were quizzed admitted to having jumped into an investment over the last couple of years because they didn't want to miss out because their mates were doing it or they read it on some social media site. And you're being talked to by the guy who put his entire first bonus in investment banking into internet stocks. And I was a genius for about 18 days, at which point, and I think it was about 2000, the internet market completely blew up and crashed. So fear of missing out writ large right here, a salutary lesson. So we are, as a regulator, we know we are dealing with a world that's different to the one that the regulations were written for. It's different from what probably most of us grew up. And in particular, investing has become a social activity. And a lot of people, and you saw this in the GameStop phenomenon in the States, are investing less because they're trying to build long-term wealth and more because they're trying to have a crack at the man, which before I was a regulator I would have encouraged, but I'm apparently not allowed to anymore. So those investors are influenced by different things than perhaps we were used to or we were expecting. They're influenced by online forums, they're influenced by their friends, they're influenced by commentary from people they've never met and quite frankly have no reason to trust or believe. And sometimes they have an emotional connection with a brand, and that's enough for them to pile in. So in the workshops we did, the people we spoke to were very clearly really buzzed about the environment in which they're operating, and particularly buzzed about the opportunity to meet other people who are in that space and share war stories and tips and all the rest of it. I'd like to say they were equally buzzed by meeting the FMA staff who ran those workshops, but that didn't feature in the feedback. Sorry, guys, I can't see you, but I know you're all here. And a point I want to make here is that it can be easy for the establishment to demonize people piling into some of these markets, particularly when you think about the extreme events happened around GameStop. And we worry, of course, about gamification. We worry about gateways to gambling. We worry about irresponsible investing. But we were actually somewhat reassured by the research, which told us that most investors knew they should have a plan. They indeed claimed to have a plan, and they intended to stick with it. So it's a start, and it does show that we shouldn't be dismissive of people piling into that. On the flip side, just as an example, I think something like 28% of the investors we surveyed were already in cryptocurrencies, and another 6 or 7% were intending to get into cryptocurrencies. And that's a sizable proportion because it's up to a third of all the people we surveyed were in there. Now, again, if you're into Dogecoin, or as I call it, doggy coin, for a couple of $100 like I am, you know, that's just a bit of fun and driven mostly by your teenage daughter. But if you put your life savings into it, then perhaps that's a bit of a risk that we need to respond to. A further 4% were either in or considering investing in derivatives. And whilst that's a small number, you know, derivatives are complex. The risk that goes with them is different to investing in some of the more mainstream asset classes, and that's something that we'd be interested in. There's a ton of stuff in the report, and I think we've got some here tonight, so I'd encourage you to either take a copy with you or to access it online. And as I said, we intend to use that research to understand better what's bringing investors into this space, what they're doing, how the providers are interacting with them, and work out how we can influence both sides of that equation to try and make sure we don't end up in a situation where the current positive feeling and confidence that's in the survey about operating in our markets disappears because people get burnt. And there will, of course, at some point be a correction, and we hope that the current enthusiasm and confidence survives that if we can. So that's a challenge for the regulators, it's a challenge for the platforms, a challenge for the media, a challenge for the investors, it's challenging for everyone. But, you know, I will reiterate what I said at the beginning. We are thrilled to see people participating in our market, and quite a few of the people in the survey admitted that they were in it just to have fun, but also to learn a little bit. To learn a little bit about how markets worked, to learn about their own appetite for loss, and you can't knock that. I think that's a great thing to have. So, you know, we want those investors to continue to evolve. We want them to stay the course and hopefully evolve into serious participants in our markets. I think that's something that we all want.